Good morning, all. It is May the 28th, 2015. Time to kick off another trading day where I think probably looking at trading range markets across the board. The upside is probably currently defined right now by a deal between Greece and the European Union. Yesterday's rally was started by, and it was an explosive rally. It was like 11 points in a couple of minutes. Was started by a rumor that we now learn was generated by Greece to stop the run on their banks. Germany came out and denied the rumors later on in the day, but it did not bring selling into the market. So we've got, if we're short the indexes, we can't be too cautious. I mean, you have to have your stops in place for that. Again, will Greece get a deal or not? Greece is going to play it to the wall. Greece, the current leadership in Greece was elected because of a non-austerity platform and ticket and policies, and they're doing their best to see if they can get that, but it hasn't produced any more money out of the EU. The EU doesn't necessarily mind Greece leaving the European Union, but they don't want it to do it on a one-day basis. Just bang, it happens, because it will stress the European Union's banking system because banks own sovereign debt in Europe, whereas in the United States, banks, individuals, and institutions own the sovereign debt. So, and that's where the rub will be. So, Germany, the European Central Bank, will argue for lesser, for at least a timetable that's spread out. They don't mind seeing Greece fall by the wayside, and Greece will take it to the last minute because they need the money. If they don't get some money to pay off all these people, then I'm sure we'll see riots in the streets with attendant burning buildings and automobiles, and perhaps even some people losing their lives. So, and the European Union doesn't want to be held accountable for that. So here we sit. Today's biggest event, dynamic facing the market, is the 7-year auction. That usually yields a sideways to higher market. There's been very strong demand for the 2- and 5-year paper. When you go into the repo market, because of the haircuts you have to take over time, 7-10-year paper, while can be used, makes it more expensive. So 5-year or less paper is where the market likes to be for the repos. We got jobless claims at 270. That will be the major focus of the market. We got pending home sales. This number can come in higher than forecast. The housing numbers this week have been higher than the forecast at plus 0.8. Crude inventories minus 1.5 million barrels. And natural gas inventories at plus 95. So they really expect natural gas inventories to build at about 100 BCF per week this time of year, and that's where we are. So number one focus, jobless claims. Number two focus, pending home sales, and then the dynamics of the 7-year auction. So I like the long side of the market because of the 7-year auction, and we'd like to buy into weakness. So the first place to see buyers is right here. We've got volume at 25 and a half, so we'll make buy 1, 21 to 25, and then 17 to 13 for buy 2. On the sell side, selling failure to take out 28.04. Market has rejected prices over 28, and then 7 to 11. Okay, the knob spread held in overnight, actually widened to 30 seconds. It'll get some play today, but it's probably not going to change too much with the 7-year auction. I just can't see during an auction the bottom falling out of the market, because you just can't move the paper when that happens. And the demand that we had this week for 2- and 5-year paper, some of that will carry over into the 7-year paper. Anything 10 years or less will attract the retail market. Some of the retail market, anything 10 years or greater is pretty much institutionally driven. And the reason for that's pretty simple. When I talked as a broker, people that bought bonds and fixed income would say, well, I can see 10 years in the future, but I may not be here after 10 years. And so they have an appetite for 10-year paper or less, because they don't know if they're going to be around more than 10 years. Pretty simple when you think about it. Most things in life are. Okay, we're at 22. Resistance starts at 28. So 27 to 31 is sell 1. Sell 2 is 7 to 11, picking up this area right here. S1's pretty aggressive, but it's where resistance is. And on the buy side, 9 to 13. And then 1 to 5. Okay, we have 2 people interested in starting a bond trading group. If anybody else is interested in joining that group, both of them are pretty savvy players. Let me know. Private message me, and we'll get y'all hooked up. Okay, looking at gold. Again, trading range market. The market is supported by fear of what the global leadership will do. What's their next move to hurt our economy or our currency, or even stay in business. We got a seller like last night. We had 90.92, so that's still where the sell is. The market it's a B pattern, and it is trying to trade lower. So we're going to put our 80.82 out there once again, and then 75.77. Pretty much where we were last night. Okay, the euro recovered overnight. Let's come back somewhat. And 109.50, a very round number, held this break in the volume up here, most recent in the market's memory, from 109.60 to 109.50. Pretty good resistance. Starting to sell. Any rumors of a Greek deal will initially rally this contract. Then reality will set in. Everything the EU is doing now is to recover and create an export market for their goods outside of the EU. Needs a lower euro to pull it off, so the long-term forces still point to a lower euro. Looking at today's activity, the last rotate down yesterday stopped at 65, so 50 to 60 by 1, then 25 plus or minus by 2. On the sell side, basically it's very, very close. 9 to 9.10 is sell 1. Then trying to pick up this volume area up here, 25 to 35, will be sell 2. And if we get, June the 5th is supposedly the next drop dead date for Greece. These guys do a marvelous job of kicking the can down the road, so I wonder, temporary patch deal is probably the best that we can see. And we'll look to see what the European Union ministers use to kick the can down the road the next time. No comprehensive settlement, I believe, is possible without Greece being pushed over the cliff and then reconsidering their current positions. Okay, crude oil is still under pressure for the right reasons. There's an article out about the real state of the crude oil market can be found in tanker rates, which are, the floor is falling out of them. So tankers have been used to store on top of the water, but they're not using it to move between the world's capitals, suggesting the world economy is slowing, more proof that it's slowing, so even less demand. We like this 57 area. 57 and a quarter is going to be our first buy band. I think that's going to be pretty easy to get to. Then it's going to be 56.50. Ultimately headed for 55, so maybe some short covering before this morning's crude inventory report. Rich Genders will not be in today. He will do his energy talk tomorrow. Sell 1 will be 57.75 to the buck, and then 58.50 to 58.73. Might get some short covering this morning. Not that the fundamental news has anything to do with which way the prices will move. In fact, same way good news is bad news is good news. The market usually reverses 3 minutes after the news hits, so I don't see that changing. And it kind of makes it nice. I mean, fundamentals just don't play in the short term on a day-to-day basis in crude oil. Rumors of war spikes up. Actual war, market settles back down when they see how much damage has been done, and then the long-term direction is lower because there's more supply than demand. Okay, the E-mini, an interesting market today. Yesterday's Greek-sourced rumor that a deal was imminent. The market is vulnerable to that. So because that might hold the market up, that'll probably put a floor in it. We've got volume in the 2105 area, 2110, 16.5. So I think we can sell a bit. Yesterday's last rotate down stopped at 10, so 10 to 12 will be buy 1. 5 to 7 buy 2. Do like the short side a little better because of fundamentals. 2022 sell 1, and then 25-27 sell 2. See a trading range market developing here. Don't think we have enough news. Don't think the world's economy is in good enough shape to break us out. All of that's not necessary. G7 continues to meet today. There are zero interest rate policies to negative interest rate policies around the globe. Have probably done about all they can. So with Keynesians in charge, borrow to spend or print money is where we're left. Okay, I'm going to get busy on what I'm doing. Maybe 20 minutes. Get back. We'll take a look at the market after the jobless claims news hits. It's #1 news focus. #2 will be pending home sales. I think we are looking at a trading range in a bit.